Hello traders, it's 8:02 a.m. on Thursday, the 10th of May, 2018. Thanks for joining me yet again. What is this, our 2000th episode or something? Thanks for showing up every day. Hopefully you're gaining something. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we are gapping up yet again above the 2700 in the ES. We had a high at 2700, which is, of course, a century figure, main strike, and a key MCLVN. This morning, oddly enough, the leader is gold, up $9.20, up 0.69%, followed by the euro. The bonds are up. And then the NASDAQ up 22 points. So it's a mixed bag. The euro stocks are the laggards this morning, down 15 points, 0.43%. The dollar's down, the British pound is down, and the DAX. So again, kind of a mixed bag. We had CPI and initial claims. CPI, interestingly, well, it came in lower than expected. Ex-food and energy also came in lower than expected. And so the market popped up. And there was an interruption, a disruption of the auction at an SOC, or the scene of the crime, being 26.99.75. It looked something like this. Let me show you. Like that. So we were trading down here, and then quick. This is, you see the big ball there. That's one print. That's somebody who swept up whoever was available on the offer, and this looks like a stop run. A big ball at the top is pretty much signifying a stop run. And then we continue this auction, but the interruption, the SOC for this, is down here at 26.9975. So I'm looking for some sort of a test at some point. Let's hop right in and look at our expectations yesterday. So the first two scenarios are looking at higher. We gapped up. We were looking for some support into the range of yesterday, 26.74 all the way down to about 26.72 or so, and this line right here. And then we were looking for the market to turn up and push into at least 26.93.75. It ended up pushing to 2700. So this was the plan that played through. Not an easy break, by the way it took out the high. It consolidated for very long. I kept repeating that this is coiling. It seems boring. It seems tight. Volume is dropping off, but it's coiling. And when the market's in balance, especially when it opens out of balance, it tends to make a strong move at some point in the session. And it definitely did yesterday. Something to note, so that was scenario 2. Scenario 3 obviously didn't work out. Here's what actually happened. Squish this. So we had this sideways trade for the entire first hour. Then we dip into 26.72 on the nose, into the prior day's range. So this looks like, and there are many indications at this point that the buyers are just not getting the job done. The delta just remained under zero for much of it. And once it dipped down, we saw the delta drop to negative 6,500 or so. And it did look like we were likely to push into mid VWAP. Remember, this is an open auction, so mid is a tricky trade, for a continuation down into 2670 and looking to target 2668.75 from the mid of about 2677. And so that was a trade I took. It just went around and around and around, and then I scratched the trade, and luckily, just out of luck, it just exploded upwards. Now this line here, this stock zone here, the 2681.75, 81.50, 81 quarter, 81 even, 81.50 again yesterday, then 81 quarter. That, you know, people say double tops or triple tops show good resistance, and those who trade the auction, the auction have the opposing view that if you have a market that pushes to a level, pulls back, pushes to a level, breaks down, and that level is tested, especially if there's a lot of volume, so that the profile up here looks very blunt like that, and whatever else it does below. So this is the volume profile. We're seeing a lot of volume near the high. What that's showing is that there's not enough, there's not an excess up here. The market having come back to that high, and oftentimes you get a triple top that does this and this. The more times it taps on that, we consider that like glass that you're hitting with a small hammer. It's just small crack, big crack, and then crash. Versus the idea that, hey, a triple, double, or a triple top is good resistance in this scenario coming at it from below. We consider that a weak high. We consider that, and you can check this through a back test. The probabilities of it holding are quite small if you create parameters around it. So that's what this 81.50, 81.75 area is, the stock zone here. So the expectation is that it's likely to break, and of course that's the basis of yesterday's scenario 1, scenario 2, that we would just go back and forth, and then finally break. It did extend higher than expected, 26.90 and a quarter into 2700, blew through a couple of levels, a couple of stock zone areas, but that's also to be expected. We're discussing that in the Convergent Trading chat room today, that these are not predictors of where the market's always going to turn. You have to look at the context of how they're being approached, and of course always who's participating. And so we've been playing a lot on the negative delta side. Over the last week, there's been a lot of selling, aggressor selling. They're not really getting anywhere because the market just kept, the ES just kept holding its prices around the 2640, 2670 area. The delta overall was negative. So there's an aggressor on the sell side. That could be a hedge. I don't know. But the fact is, a lot of that selling became buying yesterday on this move up. This seems like a big explosive move, but you know, it's from 72 to 94, 22 points overall. Volatility has come down quite a bit. Rotations have compressed. The harmonic for the ES is starting to move back towards its historical value. But, you know, overall, even though we moved up quite a bit here from 2672 to 2700, the delta was finished up pretty poor. You would expect it to be in the 40,000 range. So participation on the way up, not so great. We're seeing that, again, we've been seeing that not only last week, but on the buy side. In the past, we've had some pretty good participation, pretty good flow between the delta in the direction of price. And lately on the buy side, we're not seeing that. We're seeing delta falling off very quickly, and it usually falls off very quickly on the close, of course. But we made this top here at 2700. at plus 16,000 contracts. And then as we retested that 2,700, you could see it falling. It just drops. It drops all the way down into zero very quickly. I mean, it went from plus 18,000 to 1,900 with a move from 2,700 to 2,691. Just a lot of selling. A lot of more aggressive selling or less aggressive buying as price moves up. In either case, it's giving us a clue. So that's how we finished up yesterday. The overnight session, overall, just to continue with the narrative, we opened sideways in the Asian session, the early portion of the Asian session. We had a small pop, and we've just traded sideways. Most of the overnight session was completely imbalanced. They seem to be trading very specific prices. 2,700, of course, is a strike. And don't forget that we have option expiration next Friday, the 18th, on this product, the monthlies, and so the monthlies and the weeklies. So it's just, there's a lot of hedging going on in this spot. But overall, the overnight session is telling us that the market is really is really accepting trading between 2,704 and 2,697, somewhere in there. There's not much you can glean from that. The volume was pretty good in the overnight session, 135,000 versus 110 to 125,000 expected. So everything is normal. There isn't much to talk about here. As far as what could impact us today, we already had CPI and so on. I don't see anything on the calendar that's likely to push us around. I believe some countries are on holiday today. I think the Nordic countries are on holiday. So I don't know that there's much of an impact expected by anything that's forthcoming. Again, monthly budgets due at 2 p.m. Eastern. So coming into, oh, and by the way, I wanted to go over this real quick just so we know where we stand. Where's my composite? Here we go. This seems crazy. All right. So let's hide this. So let's just look at a bar chart here. This is the composite chart. This is each bar represents an RTH, session only bar. So each bar represents the pit session. And what we have here is, again, all-time high, explosive move down to the 200 average in February, a deep pullback, a higher low, which set us up for a likely move back up into the upper range up here, but then that fails, rolls over, puts in a higher low to the bigger time frame low. Okay, and we're tangled up in the 200 average right here, and we pop up, we pull back. And so what we've been doing is essentially kind of wedging, building a triangle here, and we're breaking to the upside. And somebody had pointed that out in the chat room yesterday. But overall, that's where we stand. I mean, it's if you draw it the way some people draw a bit of a fan, it has broken out of the first tier trend line, and then has another one up above it in the 2720. 2720 is really important now. Just watching that very carefully, but just remember that the pattern that we've built is high, all-time high, drop, higher low, drop, higher low, push, and probably rotation for higher low, and then likely continuation. We're not there yet. Yes, we did have a rally yesterday. It wasn't crazy volume or anything. Look at the volume down here relative to the other days. It really, volume was completely in line yesterday. The expected mode, or the most common volume on an RTH session in the ES, is 1 million. 1 million contracts. Yesterday it traded 1.05 million. Nothing crazy. So don't, I see comments going, oh yeah, this is it. This is the shorts are dead and this is going to take off all-time highs and stuff. And it might. I don't know what this person's time frame is. And they may be right. They may be wrong, as we all are. But don't get too excited. We really haven't accomplished too much with that pop yesterday. We're back just to 2,700. And really the bigger plays up at 2720. That's the higher time frame line in the sand. The expectation for this morning, the usual. What happens when we get a gap up on a trend day? We get an open auction, most likely an attempt or to continuing to hold the gap before continuation up 2709, expecting it to get tangled and to finish higher. And what we've done in the past is just formed a very compressed profile. We expect continuation higher today. We're going to close the gap most likely in the 2704 area, but I'm expecting a double distribution profile and the market to get tangled up in 2709, 2712, that area. That's a pretty tight range, but that's the primary scenario in play, with the fact that we have broken higher from here. We've moved the point of control higher. We have a higher high, higher low, higher point of control. The trend, the day-to-day trend is up, so that's the play. The secondary play, which is the better play for day trading, of course, is to open auction out of range, test higher, take out the overnight high, and then start to rotate down and get into the prior day's range. As it gets into, as you may have noticed, every time we get into the prior day's range, we get this turbulence. But if it does break lower, then your first target's 2696. But the key target below is the start of this, the singles at 2690. This is a price it blew through yesterday, but it pulled back to it right there. And that's the secondary scenario. Now, if real selling takes place, then we are looking at the bottom of the flagpole right here at 2681.75, 2682, the big stock zone that's held us for a week. That would be the key target. So this is my preferred play. It has countered the trend, which we've seen a fair amount of. We push up and then we start to attempt higher. We can't find the buyers to continue higher. We auction high enough for the sellers to step in. Sellers step in and boop, 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 offered. And it comes back and then rides all the way through. In fact, we've had days where we've had a neutral extreme, which was yesterday's day. Yesterday was neutral. We broke the low, we broke the high of the IB, and we finished near highs. Neutral extreme high, normally a pretty bullish. Neutral extreme on the high or low is a pretty clear. It's what used to be one of the clearest indications of a shift in trend. Lately, we've done neutral extreme high, and the very next day we've done neutral extreme low. We did that, I believe, last week. So nothing surprises me. However, this here is a singles area, a low volume node area, a poorly auctioned area between 81.75 or 82 and 90.25. That's why these stock zones exist here. They existed here yesterday as well. It blew right through them. So this is a poorly auctioned area. So once we fall into the range, I will be aggressive short into that area. So I'm not a breakout trader, but if it does start to push in that direction, I'm going to look to be aggressive enough to be a breakout trader with smaller size and a much wider stop, targeting this 81.75, which is likely to be support, or at least behave like support on a virgin test from the top. Does that scenario make sense? That's the bigger play. The third, fourth, and fifth I'll let you deal with because I'm way over my time. But, you know, don't do anything without understanding what your risk is. How much are you willing to bet on this particular play? Make sure that that's defined, predefined. If you're not predefining that before you trade, you're just gambling. The second thing is, we do all this. We read the context. We read the narrative. We break down the prior day, the overnight, for one purpose, and that is to determine what the context is and what is likely to play out. You should be doing that as well. Okay, you should be looking at not, hey, it's approaching a line. It's approaching some line, therefore I should sell that line or buy that line if I'm coming in from above. Your job is to identify who you're likely to trade against. So the time frame is very, very important. The time frame participant, your time frame is very important. Are you holding for minutes, for hours? Because you and I can have a debate about a long or short, but if I'm trading for seconds and you're trading for hours, it's a moot point. So I'm just telling you this as a reminder, as a trader. Since you're listening, you're probably looking to expand your tool set or learn something. And that's why I'm talking about it. You know, if you're doing great, then ignore me. But it's really important for you to understand what the narrative is. The narrative of the market is what drives what's going on. Other than fundamentals, which we cannot trade off of, it requires deep pockets. We're not a fund. Looking at the technical side as just a bunch of numbers, you know, Murray math and fibs and whatnot, without looking at the story itself and how the market is forming, what it's doing, what is it trying to do, who's doing a better job, who is gaining price for their effort. That's why we use delta. That sort of stuff is really important. And that's what's going to help you see the market a little bit better, gain confidence, which is the cornerstone of you being able to make money. You're not going to make money trading. You're not going to be successful trading if you're not confident in what you're doing, because you're never going to see that edge because you keep interfering with it every day. Every day you make a plan and you stay up till 1 a.m. doing these studies and looking at charts and marking them up, and then it comes time to trade and you just don't have the confidence, so you don't execute. You do great on sim though. You're a fantastic simmer. But when you go out and trade, you just don't have the confidence. And the best way to gain that confidence, and trust me, this is something from a prop trading background, the way to gain that confidence is to fully understand your tools, your approach, or understand what the market narrative is and trade from that side. Okay? Good luck.